The second panel is about to start, and having in mind all the changes that happening and probably will happen in the market, they are telling us that even companies corporates, the current ones need to really adapt. One of the premises of the next panel is that they will adapt by opening themselves to the external ecosystem, and they will get, let's say, the fresh blood and fresh thinking for all the challenges that might come. And this panel is about to focus on how that connection can be established. I would like to invite the next moderator, Fadi Saab. He's a chairman of Transcapital Finance from Lebanon. You can change. So for the first, welcome. While we are changing the names, I can also invite all the other panelists. Arton, Celina, CEO of BPB Bank from Kosovo. Arton, welcome. Patrick Kedziora, he's the founder and CEO of KedzohDental USA and WBAF High Commissioner for France. And Rui Falcao, he's a co-founder and angel investor at Red Angels and WBAF High Commissioner for Portugal, but unfortunately I think we miss Mr. Falcao. Okay, he might join or not, but I'm pretty sure that our three panelists will do more than good job even if our dear friend Rui doesn't show up. So as soon as the names are changed, the floor is yours, and you can start your 30 minutes.
Thank you very much. Good, thanks. Thank you. Good afternoon, everybody. Before we start, let me just tell you a little anecdote about a guy who went to his father and he said, I want to start a new business, so why don't you give me some seed money? Which in today's terminology is called, why don't you become an angel investor? And the father told him, okay, what do you want to do? He said, I have a great formula. I know what made Apple, Google, Amazon, those companies great, and I'm going to do the same. And the father said, great, well, what is it? He said, they all started from a garage, so I want to build a garage. Now, obviously, building a garage and having the innovation is not enough to get to success. In today's panel, we're going to talk about how can we leverage corporate innovations by engaging with the ecosystem. And we're going to concentrate on three important elements of that, is really how to connect, how to collaborate, and how to accelerate. I will skip the introduction of the biographies of our speakers because you have them in your package and on the website. And let me start with a question about collaboration with Rui, because you are an expert in the collaborative ecosystem. You have an e-learning platform. So maybe you can tell us about the importance of collaboration once you are at a level where you have a product or an innovation that makes sense and moving forward.
Okay, thank you very much for having me here. I'm very glad to be here with you and discuss this very important topic on creating a leverage of having a leverage from innovation, which I'm glad to be a speaker in this panel because I believe this is a crucial thing for having the innovation in place. Being a banker, I'm speaking from an industry that we have been rather close till now, and new regulations like PSD2 in payments, IFRS 9, etc., are forcing us to be more open to a third-party providers, which enables us to be more flexible in innovation. Innovation in our side is not only for us, but for most of the industry is costly, is risky, is time-consuming, and it requires continuous efforts and testing. And of course, many times you might not find a situation where you have necessary skills, resources, time, and all the set you need to keep up with your innovation efforts. So having the possibility to collaborate with other parts of ecosystem is crucial for us. In today's sessions, I've heard two keywords mentioned all the time: innovation and financial inclusion. I've brought with me two examples that we are doing in both aspects. But in innovation, we have a rather reverse example where we do not have a request for seed capital or any other form of financing, but where a company at the infancy stage needs a customer to prove its concept of business model. So there's a company, a small company, just recently set up in our country, in Kosovo, and they have approached us with a proposal that they need a customer to test their digital wallet payment system. Of course, for us to develop a digital wallet system requires a lot of resources and outsource companies, outsource skills. And with the analysis that we made, we agreed that, okay, we give them a chance. So they develop a digital wallet system, and if you like it, we buy it. If you do not like it, then we see what next. But this is an example that for us is going to bring a lot of advantages, so that we don't spend time, money, and other resources in testing things, but we will rather have a ready-made platform which is originated by this company. From the financial inclusion, for example, we have another example where we are trying to bring all components of this ecosystem together. And if you look at the financial inclusion in a concept from the governmental perspective, for example, it rather has a welfare meaning where bringing or lifting up a new group of population in a better standard of living create a better welfare for people. But in our business model, financial inclusion, despite the philanthropic approach, it has a business component as well, where we, if we lift up an unbankable population to a bankable population, then we will have a better potential group for new customers in the future. In this triangle, we are trying to incorporate government so that they provide some credit guarantees. We are trying to bring a donor community that can create some training environment for them so that we test the proposal. As well as a bank, we participate with some loans, so that with our repayment mechanisms, we make sure that the whole proposal and the whole business concept moves on. So by creating this cooperation, we have a win-win situation for everybody, and I believe this is a very good example for the rest to ensure that as much as we open up to further cooperations, it will be a better environment for everybody to work.
Great. Thank you very much for that. Welcome, Patrick. Let me ask you a question about the importance of connection. The importance of connecting different players within the ecosystem. And maybe you can tell us a little bit about your specific experience in that field.
I'd be very happy to. Wonderful to be here today. I'll mainly wear my entrepreneur's hat to answer the question and address this topic of corporate innovation. As an entrepreneur, I often wonder whether it's just the flavor of the month, whether there's actual real desire by large companies to do corporate innovation, or is it just a public relations stunt to simply sell the public on the fact that the company is new and modern and hip and looking forward to doing things that are exciting. I see the reality on the ground as an entrepreneur, and not just myself, but also my friends that try to connect with large companies, and it's very, very hard connecting. Even those that have an innovation hub or that are truly trying to do something. It's a very slow process. Oftentimes the people on the other side just don't get it. They don't understand. They don't have a digital mindset. They've done their jobs, and they're just set in their ways of doing it, and it's very hard to get them to think in terms of how a new technology or a new digital process could be brought to their marketplace to make their jobs easier or their customers happier or their bottom lines bigger. There's a real dichotomy between the experience of the entrepreneur and the talk that there is in the marketplace about corporate innovation. And I don't know if there's ever going to be, if that gap is ever going to be bridged. I think that there's a lot of usefulness to it, but I think that the reality is not as positive or as rosy as we often make it out to be.
Thank you. And last but not least, welcome to the stage. How can we accelerate the process of getting an innovation into the marketplace and make it a successful product? Maybe you can give us some insight from your experience on that.
Okay, well, first I would like to situate a little bit, so my perspective under what I'm doing every day. I'm a professional angel investor leading a group of angels that have several people from corporates. So our process of decision on invest in a startup is very conditioned at a certain point for all of the angels. So we have a process of decide to invest or not invest in a startup by one person, one vote. So every angels coming from the corporates also vote and decide to select a certain specific startup. And it's obvious that what are the main advantage of invest in innovation through the startups process. But first, it's the possibility to have a new look into a certain area or a certain product, the new look, new eyes. Second, the agility that startups are much more agile, are faster. Third, they are able to run certain risks that the corporates are not. And fourth, they can use some type of new technologies because they are that the corporates don't use normally. But the question comes when that the mindset of the corporates and also sometimes of the angel investors is not well suited to integrate the innovation in a very easy way. So, like you said, it's hard. So I think there is a need to change the mentality. And there is some type of presumption of knowledge. Normally corporates, I feel this also in our panels with the angel investors coming from the corporates. Angels think they know everything about their field. And they are like overconfident that their knowledge is the most relevant for the things they have been doing with success. So they they overestimate their processes, their methodologies, their ongoing things, and they underestimate the new visions of the startups. So the question many times is if also the angel mentality and the startup mentality is in convergence with the structure thinking, the way of thinking of corporates. And yeah, there are some some interesting perspectives that we can go deeply in next round. But we believe that new models of corporate ventures could be more interesting to integrate disruptive innovation into the corporates.
Thank you. If we look generally about the hindrance, the obstacles that face startups or SMEs, we see that usually it's the same. It's access to finance, it's access to markets, it's access to skilled labor, it's access to scalability, and it's access to technology. In the field of innovation, people tend not to collaborate a lot, your point about lack of culture of collaboration, because they're afraid that the technology, which moves very fast, will be maybe used by competitors. So I have the same question to all of you, is how can we establish a culture of let's collaborate more in order to compete better in taking this one step further about engaging with the ecosystem globally and pushing innovation towards success? So it's the same question to the three of you, basically.
Well, I believe this is a key question. How I see the future, the collaboration will go to different levels, independently and jointly. Large corporates, being it banks or other industries, if they see a very feasible proposal from a startup, even at the infancy stage, they will try to acquire it in a way so that they have it in-house. But the best model would be where each industry specializes in a scaled manner so that they develop products of the same industry in a collaborative way so that they create a generally or combined competitive advantage in different markets. The crucial role to play are equity markets, risk markets, and different funds. But of course, the education of entrepreneurs, angel investors, and closing this skill gap between the industries and facing the dynamics of fast developments will be crucial of making this collaboration works or not work.
If I might put a corporate hat on, this is one of my favorite topics, how companies, large established companies, can be innovative without necessarily having to have the innovation hub or the public relations veneer of trying to do things. I think there's been so many studies done on this that it's really it's so simple that it's almost never done. And the simplicity is that you need to have diversity in your teams. And diversity in your team means that you need to have a mix of men and women. You need to have a mix of people from different universities. You need to have a mix of people of different backgrounds, of different races, of different religions, although you can't ask that, at least in the US, when you're interviewing people. But you really want to have a full mix of people, because when you have a mix of people from different backgrounds, it forces all of those individuals to push themselves personally to innovate. And they have to innovate and adapt to new ways of communications, new ways of working with a colleague that is not from the same cookie cutter mold that they've come from. And by that very nature, the fact that different people are working together, you get them out of their comfort zone, and that gets them to create. And when they create, they innovate. And when they innovate, you have better returns, more profits, greater ROI.
Well, I can tell you a small story, an event that happened with us in an investment committee, that because of the thing related with integrate innovation coming from the startups. Of course, the typical way to do this is by acquiring the startup. At a certain time, a corporate can acquire a startup, but that is very expensive to the corporate. The acquisition normally after a period. So there are other ways to implement this relation. What happened one time that made me think what should be done in a different way, that was because of the angels, the corporate angels, and all of that experience that they know for the moment of helping the startup to growth, but they are with some limitations in understanding the startup when the innovation is very, very new, and it's typical that the people from corporates, when they see a startup coming to their field with a different proposal, I've seen several times, they don't want to invest in that startup. It's curious, because of the reasons that I said before, they don't want they overestimate themselves, and they don't look for the new eyes. They don't think that startups can do it in the best way. But the new propositions that are coming now, and I see that's the right models that can engage also the startups and the angels and the corporates. So it's the corporate venture building model that are typically led by entrepreneurs that answer to challenge directly from corporates. So they go to a corporate, and the corporate challenge a group of entrepreneurs to do something new related with a certain objective. And they pay a little bit of that proposal and make an agreement that in the end of a process of 2, 3, 4, 5 months, a startup process, they can buy and integrate the innovation in the company. And this is like a kind of sounding bites for the angel investors, because if we participate on that process, we can have an exit of that. So it's a kind of create a startup under the process under the startup process to answer a problem, to resolve a problem of a corporate that challenge the startup, and do this externally by a group of investors. This is something that is growing. And thank you.
Sorry to cut you, but we're running out of time. And I would like to give the floor an opportunity to ask a couple of questions. Would anybody would like to address our panelists? Yes.
So thank you for the panel. My question is for Falcao. You mentioned that at some point of time, the corporate can acquire the startup. So any hint about how to do that smoothly so that we don't harm the startup culture or degree of agility and innovativeness?
Okay. Yeah, that's one of the biggest challenge when big corporates incorporate startups and incorporate that kind of innovation under the process of an acquisition. We know that it's one difficult process. Because of different cultures, you are right, coming and a clash of cultures between the traditional way of working of a corporate with process and with a lot of process, and sometimes the chaotic environment that the startup creates innovation that's super fast, with a completely different process. So this is a great challenge, and sometimes results have good results, and sometimes has not good results. There are there are some strategies that can try to make a merger more easily, and but it's not the best. I think today it's not the best way to go through that perspective. But it's sometimes it's the best opportunity if the corporate wants to be faster and have a different technology and create an advantage, a technological advantage or another one.
Thank you. One last question. Okay, thank you for the panelists. Thank you all for joining us. I will leave you with one point about the importance of the ecosystem, which again I'd like to say it in the form of an anecdote. It's a guy who tells his friends, "Congratulate me, I'm going to get married to the daughter of one of the richest men on the earth." And his friends tell him, "Really? One of the richest men in the world?" He says, "Yeah, it's 50% sure. Me, my parents, and my friends were in agreement. Now all I need is to convince her, her parents, and her friends." So being owner of the innovation is only 50% of the road. You need to interact with the ecosystem around you so that you can lead to success. Thank you very much.